Ladies and gentlemen, in our midst is now His Excellency, the Deputy President of the Republic of Kenya, Professor Kithure Kindiki. And Your Excellency, we do appreciate your presence here. Allow me also to take note of the leadership of AVCA, chaired by Mr. Dan Ladi, the CEO of AVCA, that is Abi Mustafa, investors and private capitalists alike. Ladies and gentlemen, I salute you all. Good afternoon. Good afternoon once again, ladies and gentlemen. Thank you so much. I appreciate it. Your Excellency, sir, welcome to the 22nd Annual AVCA Conference and VC Summit. This is the largest focused private capital gathering globally that attracts investors who collectively manage over 1.5 trillion US dollars. Your Excellency, the theme of this year's conference is Breaking the Mold, Reshaping the Future of African Private Capital. At this point, Your Excellency, sir, without wasting any moment, I will now call upon the chairperson of the Africa Venture Capital Association, that's Mr. Dan Ladi, for the opening remark. Karibu sana.
Your Excellency, Professor Kithure Kindiki, distinguished ladies and gentlemen, all other protocols observed. As you can see, I'm not Mr. Dan Ladi, so permits the slight change in agenda, but it is my pleasure to introduce Mr. Daniel Mainda, the CEO of the Nairobi International Financial Center, who has the honor of introducing our keynote and chief guest for the afternoon. Please give him a round of applause as he comes up.
Your Excellency, the Deputy President, Professor Kithure Kindiki, would like to welcome you to this AVCA Conference 2026, based in the home of Africa, which is Nairobi. I would like to record apologies from the National Treasury Cabinet Secretary, John Mbadi, and also the Principal Secretary, Dr. Chris Kithure, whose remarks I'm going to give on behalf of the National Treasury. Also represented here through National Treasury is the DG of PPP, Engineer Kefa Seda. Your Excellency, members of the Diplomatic Corps, distinguished guests, ladies and gentlemen, it is an honor to stand before you today at this 22nd Annual AVCA Conference and to welcome you to Nairobi, a city that is increasingly becoming not just a destination, but a decision point for capital allocation in Africa. We as a continent, as we discussed yesterday and also earlier this morning, are not short of opportunity, and we are not short of structured, scalable, and confident capital deployment. Africa, as you know, has the youngest population globally and rapidly urbanizing markets, yet receives less than 3% of global private capital flows. Kenya's response has been deliberate and not rhetoric. We have spent some time sorting out a few issues and working on our structures. And today, the fundamentals are aligning. Just to mention a few, inflation anchored at 4.4%, FX reserves at about $13.3 billion, now about 5.8 months to 6 months import cover, previously from about 3.5 to 3.6 months import cover, which is a good buffer. Stable currency environment, private sector credit growth rebounding, and pension assets exceeding 2.8 trillion shillings, which I'm sure His Excellency is going to talk about. These are signals of a market regaining predictability, the single most important currency for long-term capital. We will not build a future of our economy on public balance sheets alone. We are restructuring capital formation, and those restructurings are as follows: National Infrastructure Fund, Sovereign Wealth Fund, and reforms unlocking domestic capital, which you'll hear in a few moments. Private equity drives governance. Venture capital drives innovation. Long-term capital drives nation building. The Nairobi International Financial Center is the platform where capital meets opportunity efficiently, predictably, and at scale. And that is why we are making deliberate steps to position Nairobi at pole position in the continent as a formidable financial center. Just to mention a few, we are now in the process of a comprehensive review of the NIFC Act and regulations to make it a fit for purpose post-2030 into the new economic vision for Kenya. Extensive review of the tax incentive and structuring components. Collaboration with the Nairobi Securities Exchange and Capital Markets Authority on creating a secondary segment for startups in the exchange, and development of carbon exchange and digital asset exchange in the NSC. We are not here to diagnose Africa, we're here to deploy into this continent. The question is no longer whether we are investable or the continent, this soil, is investable. The question is who will position early enough to capture its returns. And this answer is in the midst of this room. For us, as Kenya, we have positioned ourselves properly, and the moment is now. And we'd like the rest of the continent to join us in this nation building and continent building. And with those few remarks, Your Excellency, it's my distinct honor on behalf of the Cabinet Secretary National Treasury to invite the Deputy President, Professor Kithure Kindiki, to give his official remarks for this session. Thank
you. Thank you and good afternoon. Please be seated. It's a good time to speak because people would want to break for lunch. And I want to start by appreciating all the dignitaries and captains of industry and leaders from the private equity and venture capital space, as already the protocols have been established. I welcome you to Nairobi as the global investment community. As the speaker before me just said, Nairobi is the vibrant heart of Africa's financial and technological transformation, a city which is distinguished by its dynamic fintech landscape, robust capital markets, and thriving innovation ecosystem that continues to shape the future of Africa's digital economy. As the government of Kenya, we recognize private equity and venture capital as critical drivers of structural transformation, accelerated industrialization, and sustained long-term productivity growth. Accordingly, the government of Kenya views this conference as a strategic platform for aligning private capital with Africa's development priorities and the evolving global investment architecture. This convening reflects strong and sustained collaboration, and I commend AVCA for its 25-year legacy as a leading champion of private investment across Africa. Your role in educating, connecting, and convening global allocators has been instrumental in shaping and expanding the continent's private sector ecosystem. I also recognize the Nairobi International Financial Center Authority for its strategic leadership in positioning Nairobi as a premier regional financial hub, as well as the East Africa Venture Capital Association for ensuring that domestic and regional capital remains firmly integrated into the global investment conversation. The theme, your theme, Break the Mold, Reshaping the Future of African Private Capital, reflects the current Kenyan and African reality across the continent. We are actively rethinking on how we finance development beyond traditional reliance on public debt towards the mobilization of private capital to drive sustainable and inclusive growth. The global economy continues to face high interest rates, higher and tighter financial conditions, and geopolitical uncertainty, constraining capital flows to emerging markets. Yet, within this environment, Africa is increasingly recognized as the frontier for growth and diversification. As highlighted by the International Monetary Fund and the World Bank, many African economies remain resilient, supported by urbanization, a rising middle class, and rapid digital transformation. Opportunities for expanding across infrastructure, energy, financial services, and technology exist. I note that private equity and venture capital are increasingly becoming core engines of capital formation, enterprise scaling, and long-term value creation. Kenya today stands as the leading destination for venture capital in Africa, attracting approximately $984 million in startup funding in 2025 alone, about 32% of all capital deployed across the continent. Across East Africa, the ecosystem has deepened significantly with over $865 million deployed across over 100 deals in 2025, reflecting a clear rebound in both deal size and investor conviction. On the private equity side, Kenya records one of the highest penetration rates in the Africa and Middle East regions, at over 13% of companies being private equity backed, far above regional averages. This is a signal of both maturity and investability. Underpinning this is a growing domestic capital base, with over 2.5 Kenya shilling trillion in assets under management by fund managers, alongside pension assets exceeding $13 billion, yet with less than 1% currently allocated to private equity, highlighting significant headroom for scale. It is precisely at this intersection of a strong deal flow, growing institutional capital, and global investor appetite that the Nairobi International Financial Center steps in, not merely as a facilitator, but rather as an active architect of the ecosystem. That is, structuring fund domiciliation frameworks, enabling regulatory clarity, crowding in global capital, and positioning Nairobi as the gateway through which private capital flows into East Africa and the continent at large. Ladies and gentlemen, across Africa, institutional investors are increasingly deploying capital through private equity, venture capital, infrastructure platforms, and blended finance structures. However, a critical dimension of this evolution is the strengthening of domestic capital markets and local financing capacity. By expanding domestic institutional investment, economies can better finance development in local currency. This reduces exposure to foreign exchange mismatches, in which projects earn revenue in domestic currency but carry liabilities in foreign currency, thereby limiting vulnerability to currency volatility. Equally important, deeper local financing helps cushion economies against sudden reversals in global liquidity conditions, which often trigger capital outflows from emerging markets. By anchoring capital domestically, financial systems become more resilient, reducing the risk of capital flight and supporting more stable investment cycles over time. In this way, institutional investors across East Africa play a dual role, not only as providers of long-term capital into high-growth sectors, but also as stabilizing anchors of financial resilience, strengthening markets while participating in their transformation. The presence of both the African Private Equity and Venture Capital Association and the East African Venture Capital Association reflect the evolution of Africa's investment ecosystem from fragmented national markets to an increasingly integrated continental capital environment. We have definitely positioned the Nairobi International Financial Center Authority as the central enabler of capital intermediation between global investors and African opportunities. I note that Kenya's public-private partnership framework has become a key instrument in infrastructure delivery. Flagship projects such as the Nairobi Expressway and the ongoing Rironi-Mau Summit Road, PPP demonstrate the viability of blended financing structures where private capital is effectively mobilized to deliver large-scale infrastructure. The PPP pipeline remains strong with over 40 active projects under management, including 10 already in active implementation across key sectors such as transport, energy, urban development, and the rest. We continue to strengthen our legal and institutional framework governing infrastructure, financing, and PPP structuring. Our PPP models prioritize clear and balanced risk allocation supported by appropriate government backstopping mechanisms to ensure Kenya remains a stable and reliable destination for long-term capital. Kenya's macroeconomic framework remains resilient despite global volatility. As already been said, we have a fairly stable macroeconomic indicators over the last 3-4 years, including inflation, interest rates, our cash reserve ratio, and all the other indicators of macroeconomic stability. We have every intention as the government of Kenya to make sure that those fundamentals remain stable, to encourage investors to put their money in Kenya, whether in local currency or in foreign currency, without bringing losses in terms of currency fluctuations. We are also assuring all investors of political stability, long-term political stability, and I can assure you that we as government are committed to ensure that our stability is long-term, and will make the right sacrifices and the right decisions to make sure that we do not impact negatively on long-term political stability. The same we are doing for our economic stability, as I've already said, making sure that the fundamentals of macroeconomic stability remain stable in the long term. We are also encouraging private equity and venture capital to take an interest in our vision for Kenya's future, which has already been clarified and is being worked on, which centers around 3 pillars. The first one is we have an ambitious infrastructure program for the next 10, 15 years, 20 years maybe, to make sure that we modernize our roads, our airports, our seaports, our railway system. And we have come to the clear conclusion that this ambitious infrastructure upgrade program of roads and railways and airports and seaports cannot be achieved by increasing revenue through taxation or piling up more debt on our country. Instead, we have mobilized public resources, which we are investing in the modernization of this ambitious infrastructure upgrade program, but we are partnering with the private sector, and that's where you come in as private equity and venture capital investors. We want to invite the private sector to crowd in the National Infrastructure Fund, which we have just finalized the law, and we've already started harnessing seed capital from privatization and from transactions in the capital markets of government assets. And we want for every $1 to crowd in hopefully $10 from private sector to help us move forward our infrastructure into the more modern space, because we've realized if we continue at the pace in which we have always handled our roads and airports and railways and seaports, we will take a long time to reach the destination that we aspire to reach. The second pillar is energy. As you are aware, Kenya is a green energy economy, largely one of the most green energy mix is found in Kenya. 93% of our energy is green energy. We are looking at 100% green energy in the foreseeable future. But that's not enough. Our energy quantity, the quantum, is small because we have an ambitious industrialization program as part of defining our future. And that program of industrialization will only be realized if we produce more energy. So we have a target of producing 3 times the energy that we have at the moment in the next few years. And we are encouraging green energy investments because we are clear on our energy transition priority. Therefore, these are opportunities for you. When I say green energy solutions and investments, I'm also including associated investments, including e-mobility as we transition our energy consumption in our country. The third pillar of our future is around agricultural transformation, water harvesting, value addition in the agricultural sector, and we believe that we want to put an extra 2.5 million acres under irrigation, and that will require us to invest in quite a bit of water harvesting facilities. And we are again doing all this through seed capital from the National Infrastructure Fund, but inviting private capital on the assurances that your money is safe in the long term, you recoup your profit, and that journey, I think this will not be, this is the best forum for me to advance that opportunity. Therefore, those 3 pillars of our infrastructure upgrade in the transport and logistics space for trade facilitation, and number 2, energy, and number 3, agricultural transformation, including the industrialization and value addition agenda, is what the National Infrastructure Fund is all about. And we've started that journey. We are not starting next year, we're starting now. And we are quite underway. We are looking at the road sector, for example. We are looking at 28,000 kilometers of new roads the next few years through PPPs, and out of which 2,500 kilometers are dual expressways. We are also looking at 10,000 megawatts of electricity, as I've said, most of it green energy investment. And we're also looking at extending our railway, which we're already doing to the border with Uganda. We're also modernizing our 2 seaports in Mombasa and Lamu. All this through PPP, which is crowding in private capital to come and support our investment in through the National Infrastructure Fund. We are also finalizing our sovereign wealth fund law, which has a component also on some of the things I've already said. And also one of the purposes of the sovereign wealth fund will be to underwrite the Kenyan economy from global shocks, like what is happening currently. We had COVID a few years ago, which affected our macroeconomic situation. And right now, the war in the Middle East is another shock that we are aware of what it can do in terms of undoing some of the achievements or progress that we've made. So the Sovereign Wealth Fund will have a component to cushion the nation from such shocks, whether external or domestic shocks. The weather, for example, sometimes is part of that shock system. But also there will be a part of that proceeds will be invested in public assets that bring back revenue. And of course, the third component of the Sovereign Wealth Fund will be preserved for future generations, so that as we extract our raw materials, our minerals, and everything else that we have, we don't want our grandchildren 100 years from now asking us what happened with the titanium, for example, which was available in Kwale. Where did that money go? We cannot use the proceeds, for example, from the extraction of the titanium at the coast to pay salaries and buy vehicles for public officials. That is wrong. We will use it to cushion the economy from shocks, a third. Another third, invest it in high return public infrastructure programs, like some of the ones I've said, and then the other component will be preserved for future generations. So those are the areas. Of course, finally, as you're aware, we have our traditional high points for investments by private equity and venture capital people, the fintech, financial services, technology, etc. In a nutshell, that is what we think we could do. And I've requested the leadership of the associations and all the stakeholders in this space that today is such a short moment. We cannot canvass all the issues that we need to canvass here. So I've requested for a broader, more structured engagement. I bring you greetings from President William Ruto, and he has assured me that whatever proposals you have, we will support you to make sure that our policy is aligned to the win-win outcomes that we look for as private sector and public sector, and also that some of the things that you want, some of the reforms that you're looking for, I think we will be looking forward to further engagement. We triangulate all the issues and push them to actualization. Thank you very much. Have a good afternoon. Something open. So it is open. Thank you very much. Thank you very much.
Thank you very much. We're all required to take our seats now. Your Excellency, you're invited for a quick fireside conversation with Madam Christine Minor, who is now joining me at this juncture. So a chair has been provided for you, Your Excellency. This is one of the major requests that the investors had. It is very short, Your Excellency. Then right after that, we will have a quick photo opportunity between yourself and individuals that I will mention. Welcome, Your Excellency.
Thank you very much, Your Excellency, for making time to join us at this conference. I think, as we had mentioned before, we're very privileged to be hosting the Africa Private Capital Conference in Nairobi. The last time that we convened in Nairobi was 2019, and I believe from the CEO we have a bigger crowd this time, and so it's truly a pleasure. Mine will be very short, and because the investors wanted to hear from you. And what I'd like to ask is, you've spoken about the role of technology and public-private partnerships as the defining force for the next generation. Now, for fund managers and institutional investors in this room, thinking about a 10-year horizon in Kenya, what would you say is the single most exciting thing about where our country is headed?
The opportunities are infinite, as I've said, in the space of public-private partnerships, because where Kenya's vision is at the moment, all the pillars of our growth into the future will require public-private partnerships. The government, the public sector does not have enough financial resources or even ideas. They are not enough with the kind of ambition that this country has into the future. So we have determined for ourselves that we should be able to make it our business to provide an environment that encourages private capital to flow into this space of public infrastructure provision. So the biggest opportunity, as I've said, lies in public infrastructure, roads, railways, airport, and the technology around it, plus also the areas around agricultural value addition, transformation, and so forth. So that's the future is very good, and we are not doing this just by providing policy and regulatory clarity. We are investing ourselves in the assets that we are inviting private sector to put their money in. So we will be the first people. So we co-own the assets and the investments. So as government, we have a responsibility to protect that investment, even as we invite the private sector to put in their resources.
Thank you, Excellency. You did mention something to do with domestic capital, and our theme for the conference is breaking the mold. And that means that we're looking at new approaches of growth and investment. And we've also talked about 2.8 trillion within the pension funds. And to be actually very accurate, we only have 0.7% that has been deployed to private capital. And I know we had conversations about policies that can be looked at to make sure that there's more deployment. But my question is, how would you say Kenya is breaking the mold in mobilizing domestic capital for national development specifically? And what achievement or plans from your administration would give confidence to that local investors will play an even bigger role in this country's growth?
Yes, mobilization of domestic resources or the domestic capital is at the center of our vision into the future. What has this government done? It may interest you to know that we have tripled our pension savings, almost tripled, 2.5 times. No, doubled actually. We've doubled. What we have collected in terms of pension savings in the last 3 years is slightly more than what we had collected over 60 years of Kenya's independence. It is that profound. So we are very confident that going into the future, we have enough resources from Kenya mobilized locally, which can be deployed, as you've said, to give the solutions we are looking for. So we want to see how that space is able now to be able to be deployed. You may also want to know, for example, one of the major infrastructure projects, road infrastructure projects that we are doing at the moment, just outside Nairobi, we are building a dual, an expressway to some town about 200 kilometers away called Nakuru. And part of that project has been underwritten by Kenya's pension fund savings, something which could not have been thought about before. So I think it's important for the people around this room to see what else do we need to do to make sure that we mobilize enough domestic resources. And as somebody said here, domestically mobilized resources is not in competition with externally or international flows of resources. I think the two of them are complementary, and a healthy balance is good for economic progress of Africa and of our country.
Thank you very much. I think I've been signaled that my time is up, but thank you very much for the engagement.
That was too quick.
Yeah, I have a third question if you have time. I have one last. Yes, one more, right?
One more.
Thank you.
Can you ask me 2 questions?
Thank you very much.
Yeah, one more.
Yes.
Or
so-
maybe even from the audience, somebody, I don't know who was.
Yes, I think maybe my last question, and this ties in also to what you're mentioning, as Kenya is positioning itself as a leading investment destination for Africa. What would you say has changed or improved in the environment for private sector, especially in building policy from the government side? And would be the one thing or two things, or what has changed over the 2 years that would give confidence to the investors in the room to consider Kenya and also maybe consider East Africa as a destination for investment?
Several things. We have not changed our taxation. We have not increased taxes in the last 2 years, now going to the 3rd year, and we don't intend to make new or to introduce new taxation measures. What we are concentrating on now is perfecting tax administration of taxpayers who are already supposed to be paying the existing taxes. That predictability we think is important for people who want to invest their capital in Kenya. The taxation, the tax administration reforms or the tax-related reforms that we are making will help us raise enough revenue without introducing new taxes. Number 2, we have improved our PPP legal framework, which for many years was unable to deliver, through projects into fruition. And I think now that's sorted out, and whatever else needs to be done is, I think, work in progress. Number 3, we are also, as I said earlier on, making sure that the fundamentals like stabilizing the currency and making sure that we cushion investors from currency-related volatility and losses. For me, that's a very important policy move that should assure investors of long-term return. And finally, of course, our commitment to ensuring stability at whatever cost, making sure that we have long-term stability and we don't have kind of disruptions that in the past have hurt our economy.
Thank you. I think
Is that good enough?
Yes, and that's a good way to end it. That is going to be political stability even as we look forward to next year. Thank you very much.
A round of applause. Thank you so much, Your Excellency. At this juncture, you are now required for a quick photo opportunity. So let us kindly clear the stage. The first photo, Your Excellency, will have Mr. Dan Ladi, the chairperson, AVCA. It will also have Ms. Abi Mustafa. It will also have David Owino, chairperson, YAVCA. Christine Maina, welcome back once again, our moderator, the CEO of YAVCA, and Daniel Minder, CEO, NIVCA, NIVCA.